If you hold dollars in your savings, you could be losing money, purchasing power, every day. Why? Because of inflation. What can you do? You can diversify. The goal of this weekly show is to help you beat inflation on your savings and retain your purchasing power. I go over three main areas. If you take a look at these two charts, you'll see on this investment chart, you may have diversified into many types of investments. We're only going to talk about this portion of cash. So let's say that you just break it up for illustrative purposes only, 5 chunks. You've got 3 months of just cash. You've got 3 months of maybe CDs, hoping to beat the yield that you're getting on cash. Cash might be just sitting in a checking account or a savings account at nominal interest. Hopefully the CDs can get you a little more interest. You might rotate 1 month or 3 month CDs. You might want to get some bonds or T-bills to hopefully even beat the CD rate. But those things are just trying to beat inflation. Then you have commodities. As you can see, for the last 100 years, dollar, with respect to gold, has lost 99% of its value. But in a 100-year period of time, if you had instead vested that money into gold, you would have $10,000 instead of $100. So commodities can help beat inflation. Also, these days, some people might say that things like Bitcoin is a store of value. While this video, nor any of them are investment advice, this is what I do, so let's get started.
First thing here, layoffs surged in February to highest level since 2009. It says the pace of job cuts by U.S. employers accelerated in February of 2024, a sign the labor market starting to deteriorate in the face of ongoing inflation and high interest rates. Next, look at this. The share of credit card trade line delinquent. So, of all the people in each one of these states, here's the percentage that are behind on their credit card payments. It's got to be 2 months or more, and then it goes to the credit reporting agency. So as you can see, this isn't faring good for the economy in general when people are that far behind on payments. So for the second part, we look at debt and how the economy is doing and how the general consumer is doing. National debt, $34.5 trillion. Unbelievable. Let's look at these 4 things with regard to the consumer. Credit cards. Here we are, the latest being February 28th of 2024, over $1 trillion in credit card debt. And it was $700 billion in 21. That's unbelievable. In just that short period of time, it was another $300 billion on credit cards. Not looking good for the average consumer. Motor vehicle loans, look at this. Since 2010, straight line all the way up to $1.5 trillion in car loans. Student loans, just a rocket ship since 2010. Looks like they're teetering off a little bit, but still well over $1 trillion, pushing close to $2 trillion. And then personal savings rate. How much are we saving? 10 to 15% range. Then it came down, it's more in the 5 to 10% range. And here we sit these days at just 3.8%. Looks like it hasn't been quite this low since way back in before the 2008 financial crisis. So government's in debt, people are in debt, and people aren't saving. Another thing that shows that the economy in general is not doing great. Well, here's inflation for 20, 21, 22, 23. Here we are at 3.1%. Because the Federal Reserve has said they will not cut rates until there's less than 2% inflation. Here we are, January 24, 3.1%. The economy's not doing well and there's inflation. We may want to look at things such as commodities, gold, etc. to combat inflation. Let's look at gold price, silver price, 21.90, 24.65, commodities. You'll see below a link to, I happen to use Vaulted, and every couple of weeks I dollar cost average into gold and silver over time because I keep some of my cash reserves in commodities instead of cash to beat inflation. Some believe that Bitcoin is a hedge against inflation as well and a store of value. If you can see here, 72,000 at this moment. Here it is March 11th of 24. Obviously, commodities, gold, silver, Bitcoin, and other crypto can go up, they can go down. The point is, by diversifying, we're hoping that over time we'll beat inflation. And you can see on the chart I'm putting up here how much the portfolio has gained, so to speak, if you had diversified based on the price appreciation. But when it comes down to what I'm doing with regard to my savings and regard to my emergency savings, I keep a portion in crypto, commodities, bonds, CDs, cash, you name it. Thanks for watching. I look forward to next week's update.